Getting your mortgage lender, broker, or servicer license requires you to purchase a surety bond before your license can be issued. If you work for a federal thrift or a FDIC insured company like Wells Fargo, US Bank, or Bank of America, you do not need to get your state mortgage license. However, getting your state mortgage license is relatively straightforward, although there are a few confusing concepts. Regulations can differ from state to state. Requirements for lenders, brokers, and servicers differ. The bonding requirements are different from state to state. The good news is that all states, or most states, use the same licensing system called the NMLS, the Nationwide Multi-State Licensing System. I'll talk about the NMLS and the surety bond in just a minute, but first let's just talk about the different types of mortgage licenses. The types of mortgage licenses. Mortgage broker. The mortgage broker acts as an intermediary between the borrower and the lender. The broker is going to help the borrower find the best mortgage lender and the best mortgage product for their financial situation. The mortgage lender. The mortgage lender provides the loan. Typically, this is a financial institution, although if they're big enough, they might be the broker, the lender, and the servicer of the loan if they keep it in-house. And finally, the mortgage servicer. The mortgage servicer is a company that's responsible for the day-to-day tasks of managing the loan. This typically includes just sending out the mortgage statements and then collecting the payments. In this video, we're going to focus on the surety bond requirement, which the process of getting and the purpose of is similar no matter what type of license you're getting. What is a surety bond? A surety bond is a legal contract that acts as an insurance policy guaranteeing that you will follow your state's mortgage licensing laws and that you will conduct business ethically towards your customers. This is why your state requires a surety bond. By issuing you a mortgage license, your state is declaring you a mortgage professional the public can trust to find the lowest possible interest rate and the best mortgage product for their financial situation. Unfortunately, there are brokers and lenders who commit mortgage fraud on purpose and harm their customers financially. Acts such as approving a borrower for a loan they can't afford to repay, helping a specific borrower get approved for a loan by providing false information, hindering other borrowers from getting approved by falsifying application information, pushing borrowers into loan products that are not appropriate for them to secure higher fees, creating false fees, among other activities. A surety bond provides your customers with financial protection in these scenarios. If any of these happen, your customer can make a claim against your bond for financial recourse. How much does a surety bond cost? The price of a surety bond is determined by the surety. It's an insurance company that writes surety bonds. They determine a rate based on three things: your personal credit, business and industry experience, and prior bond claims, if applicable. These three criteria help determine a rate, and this rate multiplied by your bond amount is going to be your cost. The bond amount. The surety bond amount varies based on the state where you're seeking your license. However, most states have a tiered structure where the bond amount is going to increase based upon the dollar figure of the mortgage loans being written. Let's look at some examples. South Carolina's tiers are less than $50 million requires a $50,000 bond. $50 million up to but not including $250 million requires a $100,000 bond. $250 million and over requires a $150,000 bond. Some states only tell you a minimum, like Georgia, $150,000 for brokers, $250,000 for lenders. But like tiered states, the more mortgage loans you write, the Georgia Department of Banking and Finance may require larger bond amounts, and they're going to let you know if this is the case. Other states base their bond amount on the number of brokers working in the company. For example, Colorado's tiers are: an individual is $25,000, a group up to 20 licenses is $100,000, a group of more than 20 licenses is $200,000. How do you get the lowest rate? Remember, the surety is going to quote a rate based on three things: your personal credit, business and industry experience, and any prior bond claims. These rates are going to vary wildly from surety to surety, and this is why working with a specialized surety agency like Surety Bonds Direct is so important. Surety Bonds Direct works with multiple A-rated sureties and is able to collect multiple rates and prices to provide our customers with the lowest possible price. What happens after you purchase your bond? After you purchase your bond, you'll log into your NMLS account and grant Surety Bonds Direct authority to e-file your bond for you. We'll provide you with detailed instructions to make this process fast and easy. Once we receive permission, we'll create proof of your surety bond and notify you. Once you receive our notification, you can electronically sign the bond in the NMLS. Then just submit proof of your bond with your application, which is also done in NMLS. I hope this video helped you understand the surety bond requirement for our state mortgage license. Keep in mind though, the requirements and variables are going to be different for every single state. So if you have any questions, ask in the comments below. You can also call a bond specialist at Surety Bonds Direct at 1-800-608-9950. And make sure you check the description of this video, because I've also linked up links to relevant articles, as well as our quote request form where you can get a no obligation free quote and other resources that might help you.